Welcome back, traders and investors. I'm Brianna Valesky with Joel Elconin. We have Michele Schneider on the line. She is the Director of Trading, Education, and Research for Marketgauge. Michele, how are you doing today?
Doing just great. How about yourself?
We're doing good. And you go by Mish, is that correct?
Yes.
Awesome. Well, to get things started, why don't you give us a little bit of your market background, education, and how you got to where you are today?
Okay, well, the very short Reader's Digest version of that is I, by very fortuitous means, having a special ed background, wound up visiting the commodities exchange floor in the World Trade Center way back when, and I got bit by the bug. I knew immediately that's where I wanted to be. And I was very lucky in that Continental Grain, their futures division, Conti-Commodities, took a chance on me and hired me as a floor analyst in coffee, sugar, and cocoa. And within a few months, I was a member of Coffee, Sugar, and Cocoa doing orders for them. And then once they went belly up after the whole bunker hunt debacle of silver, I'm dating myself a little bit here, but that's okay. I became an independent broker, and I worked in all the different exchanges through the years. I spent the bulk of my experience on the Mercantile Exchange trading oil. And I also became very well known as a great chartist, and so I was often advising some of the top brokers around the floor. And back in the day, we had some of the stars, like Paul Tudor Jones and Mark Fisher. So those were all sort of in my little circle.
Okay, so tell us what you do now.
Okay, so then I left the floor, and obviously with electronic trading, and my husband Keith Schneider, who I met down there, was very involved in technology and software, dealing with charting and automated services and things like that. We wound up forming Marketgauge.com years later, and we are now 20 years later. Actually, we have all different types of services, from recommendation services to courses to teach you how to trade, to technology services, and we also have an asset management company. So my job specifically is I'm sort of the chief analyst. I do all of the analysis every night. I write a daily blog, which is offered for free. I also obviously have two services that I do more in-depth analysis for them. And we also trade in an asset management company called Marketgauge Asset Management Company.
What are your preferred methods of technical analysis? Do you use bar charts, candlesticks?
I actually use a combination of things. Starting out with point and figure charts, I like for really fine-tuning entries and exits after I've looked at top-down analysis of really just a 1-minute bar chart, which is the closest thing that we have to the X's and O's I used to draw. But as far as my real macro picture, I will look top down. So I will start by looking at the indices. I will then look at the individual sectors and groups, and then which specific equities that I might be interested in those groups, whether I'm looking at strength or I'm looking at weakness. And those daily charts are candlestick charts primarily. And then I also look at weekly charts and monthly charts. So I try to get a holistic picture. And then on top of that, I would look at volume patterns. That's very important to me. I look at relative strength. So those are, and the market internals themselves, in terms of advanced declines and all of that. So it's a lot to look at once. But after doing this for so many years, it's kind of like, it's like the way anybody who does something for a long, long time, when you break it down, it sounds overwhelming. But when you do it all the time, it's just almost like in concert, it works very smoothly.
Marketgauge released a report of phases and forecasts for 2015, and I'd love to dig into this. So can you give us a couple of highlights from that?
Well, basically, there's a couple of things. There were some trends that started to emerge last year, well, not just last year, but over the last couple of years that, I'm looking at for where we're going into this year. One of the things would be concerns like what's happening with the oil and what's happening with Russia, Japan, the fact that the rates are being kept extremely low, there's deflationary fears. All of that obviously is something that one has to keep in mind when one's looking at this year. And then, of course, we have some geopolitical situations with the Greek vote coming up. So, that's something that is definitely in the back of everyone's mind. However, I also saw a lot of things emerging last year in terms of healthcare. We had a lot of stocks, even though the Affordable Health Care Act has been good for getting a lot of people insured who weren't insured. It's also been incredibly great for health insurance companies, hospitals, and pharmaceuticals, and we've certainly seen that in the biotech community over the last couple of years. So that's been a huge area that I've been looking at going forward. In terms of just what's coming up as consumers, I'm very interested in this burgeoning baby boomer population. And what do they buy? Where do they live? What kind of health care are they using? How can that impact? So I'm really kind of going through the fundamental aspect of it. And then, on the same token, if we are truly in an economic recovery, it's very important to me to focus on the small cap stocks, the Russell 2000s, because a lot of the technological manufacturing, I would say, meat and potatoes of the U.S. economy live there. So those are the overall things that I'm looking at on the long potential side. On the short side, I look at other types of trends, like, for example, this is not necessarily, I'm not an economist or I'm going to say an expert fundamental analysis person, but I will say that as a consumer and as a student of just habits of people and trends that I see, I'm looking at the fact that technology is changing and what that actually then eliminates. So brick and mortar stores versus online shopping, smart TVs versus, typical broadcasting services that people were ordering, like DirecTV and, Comcast and those kinds of things. This is all something I'm looking at. I'm also looking at the 3D printing space, which hit really well with Hewlett-Packard and Xerox last year. But 3D printing has completely lagged, so I'm extremely focused on what happens with that, and it could be that it needs a really good earnings report, which it hasn't had in a while, to get it going. It's been, actually languishing now all throughout 2014.
What about the...
I'm sorry, Ken.
No problem. Please go on.
Well, also we have, an interesting situation here politically with a Republican-dominated House and Senate and a Democratic president. That's historical. And so I'm also interested to see where the quagmires will be as far as that, what the public perception might be. I mean, I think healthcare is going to be a big aspect, something that will come into the news a lot. So even though I'm looking at all of this stuff in my mind in terms of just keeping track of trends, social media, et cetera, to me, I don't make any trading decision. I may look at something on the basis of that, but my trading decisions will come strictly from technical analysis.
Mish, how long have you started out on the floor, right, and started doing technical analysis? When was that?
When was that? Do you really want me to tell you? 1980.
Okay, no, I
was young.
Hey, don't worry about it. I was started on the floor in Chicago in 1985, so I'm right up there with you. No, the reason I'm asking that question is because, on the show a lot we talk about, change and adaptation to the markets. Are you still sticking with basically the same principles of technical analysis that you learned at the beginning, or have you found over the course of time that you've had to make certain adaptations to your technical analysis or your trading?
Well, that's a really good question because I think that, there is something that about charts and plotting historical price data on charts that's empirical. I mean, you can't argue with historical data, a low, a high, and a closing price over the course of time. Those patterns that have repeated for years. And so from those patterns, you get probability factors. Now, what changes probability, and of course it's probability, so it's not an absolute. So what changes probability are some other factors that have come in through the years, and I think the biggest factor that has come in through the years is just the acceleration of how quickly these patterns play out or don't play out or start to play out and then wind up failing. And I think there's two major reasons for that. One is social media. Information travels so incredibly fast that the collective psyche of what people are looking at is also equally changeable. And I think another huge influence over the years that didn't exist when we were trading back then is these high-frequency trading computers and the dark pools that have a huge impact on the technical analysis. So in terms of how I would see things, that hasn't really changed very much, but the influences of how quickly we have to change on a dime, or at least maybe widen our parameters or tighten our parameters, that's something that I think has really been a factor. Now, as a floor trader who was basically a day trader, in some ways I was already trained for that. Because, you would go into the pit, you would buy on the basis of what you would hear, a lot of orders coming in, you would hear the noise starting to increase. You knew that something was happening. You knew it on a very multisensory level. And you also knew that when the buying dried up, if you were buying, it was probably time to get out. That, in essence, is mimicked almost by what's happened with these high-frequency trading computers. So we at Marketgauge have tried to put in filters to prevent that from happening. So in other words, not getting in on the highs and then finding it fails. We use time and price confirmation so that before we go in, we don't just jump in, because you don't have the flexibility that I used to have on the floor, like, whoops, I'm wrong, get out, because now you have slippage and you're doing it electronically and, you're fighting those machines, those high-frequency trading machines.
So if someone's just tuning into the show now and they know nothing about technical analysis and they're not quite sure that it's for them, what would you suggest to them? Is there a book or, obviously you provide a lot of good education, but, when I talk to a lot of people new in the business, before I talk to them about charting, I have them read Reminiscence of a Stock Operator or something like that. What would you say to that person that wanted to learn about this, not really convinced that there's not that much credibility in it?
Well, as I said, it's very hard to, I think, argue with the credibility of technical analysis when you're looking at empirical data of historical price pattern. To me, there's no difference of looking at, fundamentals. It's empirical evidence of history. But any predictions you make on it, there's always going to be, the unknown factor. The CEO quit, something happens. There's a shortage of cheese. I remember that with Kraft last year at the Super Bowl time. So, I think the probability comes whether you are a fundamental person or a technical person. As a holistic trader, I like to look at everything. So I want to say with that. In terms of where somebody would begin, I find the simplest thing to really look at is phases. This is something that I am extremely involved with every single day. And when I talk about phases, I talk about cycles. And again, cycles are empirical. No one can argue with a cycle. Everything has cycles, whether it's nature, whether it's us human beings, and it's certainly applicable to the market. So if you understand where something is in a cycle, then you can really identify what your bias might be on a near term and a longer term. And we teach about cycles. We have a fabulous course called the Complete Swing Trading System. I just, in fact, this week did a free webinar on phases. And I'm actually in process of writing a book on this very subject of phases, and it's really meant to be, I know nothing at all, I don't even understand what's going on. Where would I have some level of knowledge that would at least give me a sense of what everybody's talking about? And I think phases are a great place to start. So, to bring it to current time, all the indices, which have been sort of in a bullish phase longer term, but have fluctuated back and forth between bullish and warning, are currently in warning phase. What we're really interested in right now is, does that warning accelerate to a deterioration of even a worsened phase, or do we hold here in this warning phase, flip back into a bullish phase because we're really actually in a range? And a trading range is also a technical term. This is not a fundamental term. It's really important to know that if you look at a chart, and let's say we're looking at NASDAQ, and 99 as a level has been a support level since late October before it flew up to make new highs, then it would behoove a person to understand that 99 is an important line in the sand, and that even if it doesn't last, from a psychological collective point, from a high frequency trading point, and from every other technical trader that's out there looking at the same number, chances are you're going to see some selling coming in. Conversely, if it holds, you might see some buying coming in, and I think that's really where, for me, I put it all in. It's like I understand we're a warning, so I'm defensive. I understand the market internals right now are weak, still defensive, but I also understand that we're at a psychological and very real support point from historical data based on probability that if it holds, we could see the market move up. And then that's when all the fundamentalists come out and tell you all the reasons why. So I have always believed, from the down on the commodities exchange, when we used to trade gold, and Anwar Sadat was assassinated about 5 times before he actually really was, you could see it in the prints in gold. You could see the rumors happening before the actual facts came out. So I always believe technicals precede fundamentals, and I've always believed that since day one.
Mish, we've only got you for about 2 minutes left, but I did want to cover some of the specific names that I saw mentioned in your report, if you don't mind. Could you talk about Tesla really quick?
I'm sorry, which one?
Tesla?
Oh, Tesla. Well, it's interesting with Tesla. Obviously electric cars are all the rage on one level, but with very cheap oil, it also puts a little bit of a damper on it, because if you're not paying much for oil, why would you go to an electric car necessarily that's expensive, that only goes a couple of 100 miles before it needs to be recharged, et cetera? So again, it's not like I live in this technical vacuum, and I'm not obviously aware of what's going on. I try to be aware of everything. From a technical standpoint, however, looking at Tesla from last year, it had a tremendous move up, and then, looked like it had peaked when a lot of the other things peaked back in August, September. And now here we are currently on new lows, or I should say not new lows, but let me look at a longer term chart as I'm talking to you here. I won't say new lows, but I will say new multi-month lows. We haven't been this low since in May of 2014. So I still think that Tesla, and I believe very strongly in Elon Musk, I think he's a genius. Actually, our nephew works for SpaceX, so we've been very intimately involved with the goings on of Elon Musk and his advanced technology of things. Right now, I would say if Tesla can hold up above 180 level, it's trading right now at 190. So you have about a $10 window, which is not even that big in a stock that trades as wide as this does. And we start taking back out over 200, particularly on a monthly basis, then it's a very good chance that Tesla will have maybe not an amazing year, but certainly a good year, or at least we can say maybe it's sort of bottomed out and it's more fairly valued at this price.
We've had Michele Schneider on the line. She works at Marketgauge. She's the Director of Trading, Education, and Research. Michele, thank you so much for joining us today. We really appreciate it. We'll definitely have to bring you back on the show again soon.
Oh, thank you. I appreciate that. And thank you again for this invitation today. And you all have a really great weekend and day.
You do the same, Michele.